Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles, least of all stockbrokers.
Hey everybody, it's Lawrence from financialthing.com, and today I'm doing a Trading 212 portfolio update video. I haven't done one of these in a really long time, and if you don't watch the live stream on a Thursday at 7:30 p.m. UK time, which I highly recommend you do, I do an update on there live, but for those of you who don't watch it, here's an update video for you. And I'm going to be talking about what the hell is going on in the markets at the moment, the stock market, which has taken a real beating over the last few days. We are now January the 24th, 2021. So let's talk about why the stock market is doing what it's doing and what we can do going forward as investors to really protect not only the mind through the emotional swings of watching our portfolios go up and down, but how can we protect our capital too? So let's get right into it. Okay, you can see here today is really a tough day for the S&P 500. We have seen a minus 2.46% decline, and I know some of you have been waiting to enter the markets, and do I think this is a good time to do it? I don't know. I would sit on the sidelines right now. We have a lot of uncertainty in the stock markets because of these two things that are happening right now. We have an important meeting of the Fed that is going to make comments on Wednesday, which is January the 26th, 2022. And this Ukrainian situation with Russia amassing troops on the border, some people thinking maybe they're going to invade, maybe they won't. We really don't know. This could be just posturing by the Russians. But if they, for some reason, were to invade the Ukraine, I think you could see a major downturn with the stock markets and especially major pressure on oil stocks, at least temporarily. And you know I've been a big proponent of oil stocks because of what I think is going to happen in the future with the prices. I think generally they will be bullish, but you're always going to have these short-term concerns and things globally that you just have no control of that can really put a dent in the markets. So let's take a look at the Trading 212 portfolio. You can see here generally stocks really in the red today. If you look down, you can barely see anything green at all. Things even like Google down 2.5%, Tesla down 5% today. And the portfolio itself has taken a bit of a beating over the last few days. We were over £15,000 now, down to about £14,139 at this current moment. And if you take a look at the stocks that I picked out for this portfolio, some of them have really had a difficult time, like Alibaba, which is in the red by 17%. We've got CleanSpark, which is a cryptocurrency mining stock, down 61%. Diamondback Energy, a little bit in the green, about 8.9%. Some have been good, like Centrus Energy, which we sold off a lot of those to take profits when Centrus went really high. We're still 39% on our remaining holdings in the green. What else? Laredo, 26% in the green. Lloyds Bank, 94.7% in the green. And Vermilion, this has been one of the stars of the show, 80.38%. That actually was up over 100%, but it's taken a big hit because of what's going on with the oil stocks today and over the last week. And then Palantir, another bad buy, I think, at that point. Long term, I think it's going to be a fine stock, but unfortunately, timing is everything in the stock market. And this one is now at a 50% loss. So what did I do today exactly? You can see here I've got about £5,600 in cash because I'm going to wait to see what happens over the next week with the Federal Reserve meeting. Jerome Powell will probably make a statement about tapering and interest rates coming up on Wednesday. And also, let's see what happens with the Ukrainian situation. Maybe that will settle down a little bit and give the market some calm. But there's never anything wrong with taking profits if you feel inclined to do that. Problem with market timing, you just really never know when is a good time and a bad time to get into the markets. And if you look at this chart over here, on the left, you can see at a time when the market was doing really well and the portfolio was up to about £15,000, I decided to move heavily into cash at that point and take some profits. And, we started selling out in this portfolio about £14,800. If you can look at the account value now at £14,147, this is a great example about how timing is very difficult to achieve. We just don't know when those good and bad times are to come in. But you can see went back into the market down here, and really we were no better off than we were, about 19th of July. So again, market timings, I would definitely not recommend it for nearly everybody but the most advanced investors out there. Sure, you can get lucky some of the time, but you're just going to have a lot of emotional upswings and downswings. And, honestly, I have better things to be doing with my time than trying to manage portfolios and trying to pick out the right and wrong times. And no doubt I'm just going to get it wrong some of the time, as you could see with my 61% loss on CleanSpark and my 50% loss on Palantir. So fully transparent, I am definitely no genius, and the crystal ball gets it wrong a lot of the time. Now, if you're a long-term investor, none of this is going to make any difference to you. I mean, the best advice I can give you is just buy into the market when you have money. Don't sell, hold long-term. If you're buying things like index trackers, you're just not going to have an issue long-term, as historically the markets just tend to have gone up, and you just don't want to be trying to time. How has this portfolio performed in real percentage terms since you started it in September of 2020? Well, I'm glad you asked. If we put the numbers in right now as it stands, £14,224, that is an increase of 158.61% from our £5,500 starting point. Now, if I could consistently get these type of returns on a stock portfolio over just 16 months, I'd be a full-time stock trader. But let's face it, I got very lucky. I happened to move from tech into oil at exactly the right time and was able to benefit, almost tripling the portfolio. But that could have easily have gone the other way. And if you're a amateur investor like I am, full disclosure, the best way to invest long-term, just put your money in index trackers and don't go through the emotional ups and downs that you're going to go through if you try to pick individual stocks. Having said that, the portfolio has performed really well, so I'm very happy with it. So a great thing about this portfolio, and the real reason now that I do this and continue to do this, is to be able to donate to two of my favorite charities. And I do take profits from this portfolio and split it equally between Forest Home, which is a hospice home in Poole, Dorset, where my dad was actually cared for before he passed in 2015. And also my good friend Dr. Paula Danda, who is head of the Worldwide Healing Hands organization based in California. And what Paula does and her team out there is they take mission trips to very, very underserved areas of the world, different countries like Haiti, Africa, some places in Asia, Cambodia. She has served thousands and thousands of women that do not have money for healthcare, and she donates her time free of charge. And she has had some amazing stories about the type of people that she's been able to help. You can see 10,806 women and families served here, and she's been able to train her and her team 566 midwives and surgeons and nurses in these foreign countries to be able to give aid after Dr. Paula and her team leaves and goes back to the US. So two charities that you can see Dr. Paula here on the left doing what she does. Two charities that are very near and dear to my heart, and the reason why I continue to do this portfolio and able to donate to those. So there you have it. That's what's going on in the Trading 212 portfolio. I will be updating again soon and seeing what goes on. Maybe we're going to move some stocks around depending on what happens in the market, but very, very heavily oil-based, and probably going to continue to do that depending on what happens with the Ukraine situation. If you like the video, please hit the subscribe button, like the video, and tell all your friends and family about the video. And until next time, have a great week. Be safe out there. And that's all I got.